Mark Twain was asked by a prospective investor whether September is a good month to invest in stocks. The great humorist answered thus: as you see, after September, all the months of the year not good months for investing. So he put in a very nice way and said September is of the dangerous month to speculate in stocks, and so are the others. So keeping that in mind, let's see how our market has behaved during the last 3 years. Now this is the SPI index from 1st January 2009 to date, actually, even though it says 2nd September, it is right up to 26th of September, even on the days, but it is still the same. And this is how it has gone up and down. And particularly, I would like to draw your attention to the area that is marked with 2 blue lines. And that is where all these manipulations took place. Otherwise, it was very sedentary, as expected, increase in the index. But from about 2nd August 2010 to the 10th of February 2011, a period of about 7-8 months, you can see that the index has gone up from 4,800 to 7,800, a 63% increase in about 8 months or even less. And this is something not normal or usually any stock market. So what really happened during this period is the question. And today again, you can see from about 2nd of August, it was at around 4,800. Now it is gradually going up, and today it's almost 6,000, just under 6,000. But you can also see here and here, because the manipulations took over, to charge the operation really, that was the same level. Now this is again CSE behavior during period of manipulation. And you can see here, in a more detailed manner, how it had gone. From 4,000 from 1st June 2010, 4,600 to about 8th of February to 7,800. 2 changes. And just remember this, what's the difference between buying a lottery ticket and buying a penny stock? In the first case, you will help finance your in the second case, you will help finance stock promoters home. So, this is what happened during this period. And investors have financed a lot of homes during this period. And I'm going to show you some examples. Some of them are not exactly penny stocks, but really, but the same theory is true for them as well. Take some of the examples of porcelain, price increase within a very short period, 30th June to 3rd August 2010 by 206%, and all the figures are there for you to see how they have been manipulated during this period. Blue diamond jewelry, it has no intrinsic value at all, but still people will buy. And then we will go to specifics. And this is one. And within a short period of 16 September to 3rd October, it went up by 204%. Unbelievable. Then lung hospitals, this was just before the Fortis healthcare came in. So it was purposely manipulated so that Fortis, the shares could be sold to the Fortis at a much higher price than actual value of the stock. It went up by 177%. From 5th August to 17th August. And HVA Foods, that is a hugely manipulated stock. It has no value at all except for the brand. And within a period of about 12 days or 11 days, it went up by 394%. Can you ever believe the stock going up like that. And what is the EPS? The 9 cents. And East West Properties, again another one, from 27 July to 27 August, within less than a month, it went up by 336%. Radiant Gems, now that is in the default mode, it has gone up from 6 September to 26 September by 157%. So all those, and many more, I can give many more examples, but then I selected just a few, were obvious manipulations by what I call the mafia that operates in the stock market. Some investors and their crony brokers getting together and manipulating and making billions of rupees during a very short period. Not only home pools, they may have built mansions and bought BMWs and Jaguars and Mercedes-Benz with all the money they have made, and also gone into other investments as well, such as in tourism and many more. And in 2009-2011, because of this behavior, CSE became the second best performing stock market in the world, with 126% and 90% growth. But the important factor is there was a net foreign outflow. The foreign fund managers and others knew that this can't last long. So they got out as soon as possible. In 2009, 789 million rupees went out. 2010, 26.3 billion. And 2011, 19.1 billion. When the market was booming, the foreigners were leaving. Then, so who were the net buyers? The domestic investors were the net buyers in the market from 2009 to 2011. And the average daily time was given there. And these are the EPS, the PEs, but these PEs are not what is reflecting the CSC calculations if you take, because this is Thomson Reuters, and they have different way of calculating, that is 75% of each market capitalization, and they don't take any loss-making comparison to the EPS. So Sri Lanka as of 21st of September was 14.5, quite attractive, but compared to China, it is China still very much cheaper. So in past 2010 to 11, there was excessive speculation in the market. There was steady outflow of foreign funds in the CSE during 2010-11, and the reasons were the CSE was overpriced, the estimate rupee was overvalued, better converted dollars in such a situation, and of course there are domestic compulsion, the European economic crisis, and various other reasons. Then the interest rates also doubled, which had a twofold effect on the market. Margin financing cost became prohibitive, significantly erodes corporate profitability. Impact on the primary market. These are money that was sucked in from the market. 13 offers of subscriptions amounting to 19.1 billion, 22 rights issues amounting to 16.7 billion. And as you know, most of the rights issues and IPOs were highly overrated and recommended by some of the brokers as buys, but those who have bought have burned their fingers, and now they are going at much less than the initial offer price. Then the trade balance deteriorated and exports were negative. The affected imports went up. Tourism sector benefited somewhat, but energy electric costs also escalated to the world market price again. This brought in various restrictions. Then when the stock market was going up also, there was this credit available to stock brokers at 7 billion rupees, but they didn't utilize the full amount. But at that time, during the period of Mr. Shivanjasa and Mr. Manikada being the Director General at that time, there are a lot of restrictions were brought in, but in spite of that, the market went up. These credit restrictions, other things, really didn't have effect on the market manipulations. These are the mixed data that credit issue is hampering the market, which is not so because the market continues to go up. Price trend also didn't affect the market very much, and the figures are all there. And after price band also, daily turnover also continue to rise, not coming down. So this means that the brokers are saying that credit restriction, price ban, and all these things were really affecting the market were not true. Then the recent past 2000 to January to August, average daily turnover 2011, 2686 million, in 2012, 864 million. Foreign inflows, this is the important thing. In 2011, there was a negative 10.5 billion. That is going out. But now, in 2012, up to end August, there was 28.5 billion inflow. Even though the index was minus or going down, but there was a net inflow of foreign capital. And that is zero cost capital to the government because we don't pay any interest on that. Of course, they will take the money out as and when they want it. But when central bank borrows at 6% plus, this is a real bonus. Money coming at zero interest. Now what happened during the last month is the question. The SPI has gone up by over 1,000 points, basically 20%. What has changed? Fundamentals, no. What we had imposed then still continues. Under the present management policy, nothing has been relaxed. Credit rule remains and net asset values still remain. No change in the formula in working out the credit and no policy changes. So what has changed? Only the chance. But can that really affect the market? So obviously, my question is, did some brokers and a section of media discourage investors to trade during the first 8 months of 2012? If you read at least one particular paper, I don't want to mention names, it was always carrying negative news. I think the latest hobby was SEC bashing. And every day there was something about SEC. And the brokers were always saying not enough credit and SEC is sending letters and creating a fear psychosis. That particular paper was carried every day that it called fear psychosis. And there was a deliberate move, a conspiracy to prevent investors from coming into the market. Because they didn't like the way we were taking action against the manipulators. They wanted to protect the manipulators. So the only way they could do that was to create a bad impression about the regulator. Say that what the regulator is doing is really hampering the market from development. So my question is, was this an induced sentiment? I am quite convinced it is, and it was. If you take 2010 to 2012, the positives are here and negatives are also here. Now credit is one thing we do not know yet, because in September how much credit the brokers are given to investors is one question. The answer will be known only in December, because they give T plus 120 days credit. T is the day of transaction, plus 120 days credit now. That we allow. So what is given in September will only be known in December, after 120 days, 4 months later. So therefore, whether this increase in the stock index or the stock market or the volume in the market is the one reason for that is increased credit. We cannot tell, but we can of course make assumptions also without knowing exact facts. But that will be known only in December what has really caused this increase. But I must also say that some net foreign buying is now coming in a fairly big way, mainly for blue chips. Not mainly, almost 100% of blue chips. Just I don't want to mention names, but you know what the blue chips are, who are now doing very well in the market. Some are at 180 a month ago, today is 222. Some are around 100, now they're around 112, 114. So those blue chips are still fundamentally improved value. So therefore, there are certain funds who are looking quite seriously at the blue chips, and that money is coming in. But again, what came in during the first 8 months of the year and what came during this month, when you compare with monthly average, this month is less. I will show you that. If you look at the last column in that, and negative 2012 September up to 25th, net foreign inflow was only 2.19 billion. That is 18 out of the 20 working days. That is I can take today, obviously, and tomorrow I can't take. So in this month there are 20 working days. 18 months I have taken. It is only rupees 2.1 billion. Whereas in the first 8 months of the year, the average monthly inflow of foreign money was 3.56 billion. So even with all these positives, this month the foreign net inflow is less than what it was during the first 8 months on a monthly average basis. Now this is one thing that I don't want to mention here, but this, of course, the company is obvious. They came by way of an introduction at 20 rupees, and it hit an all-time high of 1,500 rupees a share, and currently is trading at 1,100. Of course, very liquid share, and share volume has also given. The market capitalization at today's price of 1,100 is about 25 billion rupees. And actually the company has really very little value, but it is now within the top 20 by way of market capitalization. What is the advantage that this gives to the shareholders of that company? If one person holds 5% of this, it will make him a paper billionaire. And if another company owns 51% of this company, and its value will be over almost 13 billion rupees. And if somebody owns 1/3 of that company, his personal net worth would be over 4 billion rupees. That helps him to get a higher margin. He can go to a friendly margin provider, a bank or a broker or any other fund, and say that this company is now trading at this level, and therefore the market capitalization is this, and my share in that company is worth so much. And of course, a serious banker will not give you money, but a friendly banker will give you money. And I know who those friendly banks are, and also there are friendly margin traders as well. So they will give money, and it will bring more money into his hands to manipulate the market further. So that is what is happening, and this one particular company, that is what has really happened. What is the way forward? How to prevent all these things happening and have a well-regulated but a healthy capital market in Sri Lanka? These fundamental factors that are contributing to the crisis have to be corrected. Then the objectives of the SEC must be achieved. The creation and maintenance of a market in which securities can be issued and traded in an orderly and fair manner. That we all agree that must be done. That is what we were trying to do. Protect the interests of the investors, and the most important thing, because especially the retail investors. And thanks to the Sunny Times that initiated the formation of an investor association and something like that. And in other developed markets, not even developed markets, even in the emerging markets, there are investor associations. They are not necessarily there are in all the markets, but in each market there is only one, recognized by the regulator and the capital market. You take Malaysia, one of the most developed markets in this region. If you take Canada, one of the most developed markets in the world, there is one investor association recognized by both the exchange as well as the regulator. And in fact, they nurtured. The initial funding came from the regulator as well as from the capital market to form this association. And they are so powerful, they can go to courts challenging a company if they see that any wrongdoing is happening. So that is what type of investor association we want to form in Sri Lanka. And we started that. And I don't know what the present management will do about it. Then operation of compensation fund, of course, we all know that in case of a systemic collapse, there must be some money to salvage the situation, and for that the SEC is provided with the cess, and with that we have the compensation fund. And with this cess fund, we also are supposed to undertake some market development work as well. not promotion, but development, educating the masses how to invest, taking it to the universities, the schools, and educate our future investors as to how they should come into the market. All that can be done under that. Then regulation of the securities market and to ensure that professional standards are maintained in such market. And this is another thing that we were trying to do and we are doing, but unfortunately we were not allowed to do most of these things because the mafia was so powerful. So this is what the plan we had, the firm action against market offences. And the government and other stakeholders about, of course, unfortunately we didn't get it. Introduction of measures of good governance. That is fit and proper criteria of directors, FCD, and related party transaction control on that, and so many other things that the SEC and my guidance had concept papers posted on the website, and we got good public response, and those were to be implemented. And I hope they will carry on with those things because good governance is absolutely essential for a healthy market. Then the risk management system. The market or stock market is one of the few, at least must be the only market in this region or the whole world other than perhaps Bangladesh that doesn't have a risk management system. We operate blindly. So we were people have been talking about it, the Colombo stock exchange have been talking about it, SEC have been talking about it since 2008, implementing a risk management system in Sri Lanka. These are well-known things. I mean, it shouldn't take so much time, but nothing has happened. When I took over, I saw that nothing has happened. So we immediately started a dialogue with the Colombo Stock Exchange, and the National Stock Exchange of India came in to support us, and with them, CSE is now developing a risk management system. The first one, or the basic one, was the R&D, the basic risk management was to come into force by 31st January 2013. I hope they will keep the deadline and bring it up. Otherwise, there will be serious issues when if there are systemic failures in the market. Then the DVP, the delivery versus payment, was to be implemented by 30th June 2013. And central counterparty, which is the final, the risk management system, was to be implemented or is to be implemented by 31st December 2013. These are the timeline drawn up by us, and I hope, sincerely hope, that the present management of SEC as well as CSE will stick to these deadlines, because operating without a proper risk management system is the most dangerous in the capital market. And protection of investors, particularly retail investment, is a must, and as I said earlier, the investor association has to come in. Then independence of the regulator. Without this, we can't operate. The appointing authority can be anybody. I'm very fond of quoting the US SEC example, because there's also has Securities and Exchange Commission. Of course, they are far more powerful than us, because there is no registered companies in the US. The SEC looks after all the companies, whether they are publicly quoted or not. They both come and all come under the purview of the regulator, Securities and Exchange Commission of the United States of America. Very powerful, but completely free of politics. Appointing authority, the president. All the commissioners are appointed by the president, not by the Minister of Finance, by the president, and the chairperson is appointed by, or chairman is appointed by the president. And the present chairperson of US SEC was appointed by President Reagan as commissioner in 1988. 1988 by President Reagan. And she was a young lawyer of 40 then, a lady, Mary Shapiro. And she had served under President Jerry Ford, President Bush Senior, then President Clinton, then President Bush Jr., and now under President Obama. And President Obama is the one who made her the chairperson of US SEC. You can see that Republican president has been there, Democratic president has been there, but there will be zero interference from British. And who started as a full-time commissioner in 1988 is today at the age of 40. So now today she's 64, and she is the chairperson of US SEC. And that is the type of organization that we would like to. But that, of course, perhaps utopian. We cannot expect in these third world banana republics that kind of thing. But at least some independence has to come in. Without that, state cannot operate. They might say, because the moment from the top figure the message that President desires your departure, you've got to do. You have to go. And there's no point in fighting. So that has to go. The independence must come from the Securities and Exchange Commission. The commissioners must be guaranteed. That must be done. And also part-time chairman or part-time commissioners, I don't think it's a good thing. At least there should be one full-time commissioner. And all the exchanges that I have observed along their websites, and I have met them, some of them in China when I went to the ASCO conference, the World Conference of all the regulatory authorities. And they have been there for at least 7-8 years. So that you get to know the thing, you know the people, get to know the people, you become an expert in regulatory work, and then you can continue. But here, last 3 years, there have been 3 chairmen. When I went to China, and when I introduced myself as chairman of Sri Lanka, some of the people asked me, what's happening in Sri Lanka? Last year there was a lady, and the year before there was another gentleman. Why are we changing your chairman so often? I think that's a question that I cannot answer. If you have access to my president, you can ask. So unfortunately, that is in Sri Lanka, but whereas in other countries, they continue for at least 4-5 years, and there are full-time chairman of, there are they call whole-time commissioners in India, and whole-time commissioners in Malaysia and all over the world, and in the USA also, the commissioners, at least 3 are full-time, the chairperson is full-time. The way forward, another one is the demutualization of the CSC. As you know, the stock exchange are owned by the 15 founding brokers. And this is one of the few exchanges which are still owned by the brokers. But of course it is utilized by guarantee, and so therefore they cannot go on the profits. It goes to a fund. But that is not the best, because then of course changing a rule is very difficult. Broker rules in the in CSC, it's almost impossible to change. It has a very good board. The chairman is Secretary of John Case, and the board of directors are also very highly respected individuals. But of course, they are very busy with their own careers. They are bankers, they are fund managers, they are very senior executives of blue chips. So therefore, they can devote very little time to the affairs of the stock exchange. So therefore, full-time managing director has to come. That can come only if CSC is demutualized and a public company is formed with shares given to the founding brokers and the other brokers and to the government, plus the members of the public, like any other publicly quoted company. So demutualization of CSC is one of the most important things to have better regulators and more vibrant capital market in Sri Lanka. And we have also proposed a lot of amendments to the SEC Act. The first thing I have already mentioned was clearing corporation, that is the CCP. And in criminal offences, we are only now given the criminal jurisdiction, but we also want civil jurisdiction, because it's much easier to prove offences against a civil court than in a criminal court. And that is civil enforcement powers. And this regulation of the individualized exchange, including the stock exchange, a derivatives exchange, and futures exchange, and a commodity futures exchange as well. Introduction of provisions on licensing, including the provision of two-tier license scheme. And that's all I have to say. I think after that my discussion will follow. But if you have any questions before we go to the discussion, I can devote about my time for that.